All right, so here are some important tax changes for your tax return 2022. All right, first thing, first-time home buyers tax credit has increased from $5,000 to $10,000. So it used to be a $5,000 non-refundable tax credit. Now CRA has increased it to $10,000. Now that is kind of annoying for those who bought their first property before 2022 because they only got $5,000, but those who bought in 2022, they get a $10,000 non-refundable tax credit, which kind of makes sense because prices were kind of ridiculous in 2022. Now remember, this is a non-refundable tax credit, so it doesn't mean that you're getting this amount back as a refund. It just means that it goes against your tax deducted already. So you need to have income, you need to have tax deducted in 2022 to actually get this, to get a benefit from this. And since it's a non-refundable tax credit, so it's only 15% of $10,000, so $1,500. So you need to have paid at least $1,500 of taxes throughout the year to actually feel the benefit of this credit. Otherwise, you're not going to get $1,500. So if you have no income, you're not going to benefit from this credit. You need to have income in order to pay taxes, to have a taxable amount, and then this non-refundable tax credit will go reduce your tax owing. So on your tax return, this is what it looks like. So it's a federal non-refundable tax credit. You can see it here, home buyer's amount. Now this is the old form, but in 2022 it's going to be maximum 10,000 instead of 5,000. So you're going to enter 10,000 on this line, but at the end you can see it's multiplied by 15%. So you only get 15% of that, and then your total, what's left over here. So you can see in the calculation of your net federal tax, the first line is line 73, and if you go back up on the tax return and you look for line 73, it's basically just the calculation of your of the tax that you have to pay on your taxable income. So depending on your bracket, you're going to owe a specific amount of taxes depending on your bracket, but then you can reduce that amount of taxes that you have to pay by your non-refundable tax credits, which you could see will be entered over here on line 119. So then your taxes on your taxable income minus your non-refundable tax credit will give you your basic federal tax. So that's how a non-refundable tax credit works. So if you don't actually owe any taxes, you're not really going to benefit from it once again. Another increase in 2022 is the home accessibility tax credit. The annual expense limit has gone up to $20,000, which would provide a tax credit of up to $3,000. So once again, the home accessibility expenses, it's a non-refundable tax credit. You can see it on part B of your tax return. So non-refundable tax credit, home accessibility expenses. So once again, it's only a benefit to you if you actually have an income and you have taxes owing. So this is last year's return. You can see it says maximum 10,000, but this year in 2022, it's maximum 20,000. So once again, that'll be an amount that you enter here, and then you only get 15% of it as a credit to reduce your taxes owing. Now this is a special one from Ontario staycation tax credit. Now it's kind of funny because it's not coming back in 2023, so you can only take advantage in 2022. So you can see here the temporary Ontario staycation tax credit for 2022 aims to encourage Ontario families to explore the province while helping the tourism and hospitality sectors recover from the financial impacts of COVID-19. So what is the credit? Ontario residents can claim 20% of their eligible 2022 accommodation expenses, for example, for a stay at a hotel, cottage, or campground when filing their personal income tax and benefit return for 2022. You can claim eligible expenses of up to $1,000 as an individual or $2,000 if you have a spouse, common law partner, or eligible children, to get back up to $200 as an individual or $400 as a family. So the eligible expenses is $1,000 as an individual or $2,000 as a family, but you're only getting back about 20%. So 20% of those expenses as a credit. Now, is it a non-refundable tax credit or is it a refundable credit? It says here the Ontario Staycation Tax Credit is a refundable personal income tax credit. This means that if you are eligible, you can get this tax credit regardless of whether you owe income tax for 2022. So unlike the non-refundable, you don't have to have an income, you don't have to owe taxes to actually get the benefit of this. You can actually get a refund of this amount whether you had income or not. So Ontarians can get a $200 credit or even a $400 credit without even having income for the year or owing taxes for the year. So here's another credit from Ontario, Seniors Home Safety Tax Credit. This one is a temporary refundable personal income tax credit that can help you make your home safer and more accessible, helping you stay in your home longer. So the credit is available for 2021 and 2022 and is worth 25% of up to $10,000 in eligible expenses per year for a senior's principal residence in Ontario. The maximum credit is $2,500 per year. So who is eligible? You're eligible to claim the credit if you are 65 or older by the end of the year, live with a senior relative, or will live with a senior relative within 24 months after the end of the year. Here's a good example here. Example number 2. Haley in her late 30s has asked her senior mother to move in with her. In 2021, Haley spends $1,000 to add accessibility features to her home. She will claim that amount on her 2021 personal income tax return. So Haley will claim that amount and receive a senior's home safety tax credit of $250. So 25% of $1,000. And that is a refundable tax credit. So she's getting it even if she owes income tax or not. So for Manitoba, for renters under the Education Property Tax Credit, renters, if you rent your home, you may qualify to receive up to $525 under the Residential Renters Tax Credit. So the Residential Renters Tax Credit provides savings of up to $525 a year to Manitobans who rent their principal residence. Individuals who rent a residential property in Manitoba may claim up to $43.75 per month for each month they rented their home in a given year. So for Newfoundland and Labrador, the Physical Activity Tax Credit provides a refundable tax credit. So refundable, so they didn't say non-refundable, so that's good, of up to $2,000 per family. This credit is an incentive for families as they look to access sport and recreational activities. It also holds the benefit of supporting the local health and wellness industry. So calculating the tax credit, you can claim the lesser of $2,000 per family or the total of your eligible fitness expenses. So that means if you've spent, let's say $5,000, you can't claim $5,000, you'll have to claim $2,000. And then these expenses, they have to be reduced by the amount of any reimbursement you've received from anyone, either your employer or government assistance. And then this amount is then multiplied by the lowest statutory tax rate, currently 8.7%, to determine the value of your credit. So in this example, if you spend $1,500 in eligible fitness expenses, you can claim the lesser of $2,100, so it's going to be $1,500. And then you're going to take that $1,500, multiply by 8.7%, and that's the refundable credit that you'll receive. So you don't even have to have income or owe income taxes to get this amount. So you see this, it says here that this credit can be used to reduce tax payable, or if there is no tax payable, it will be refunded. In the other example, Tom has $3,000 of expenses, he can only claim $2,000. And then multiply that $2,000 by 8.7%, he'll get $174 back as a refund. For Nova Scotia, you've got the Nova Scotia Children's Sports and Arts Refundable Tax Credit, refundable. So not a non-refundable, but just refundable. So once again, you can get this credit even if you don't have an income and even if you don't owe any taxes. So parents can claim enrollment and registration fees for sports and the arts when filing taxes. This is a $500 tax credit effective January 1st, 2022. Now for Prince Edward Island, you've got the Children's Wellness Tax Credit. It's a non-refundable tax credit of $500. This started in 2021. So on the tax form, it's a non-refundable tax credit. So under non-refundable tax credit, you'll find it over here, Children's Wellness Tax Credit. This is where you would enter 500, which is then multiplied by 9.8%. And then what's left over is what goes against your tax owing in this case. So you need to have an income or you need to have taxes owing to benefit from this credit. Stay tuned. Very soon I'll be making a tutorial video on how to use TurboTax online to prepare your tax return, how to use Wealthsimple Tax to prepare your tax return as well, and finally how to use UFile to prepare your tax return. Thanks for watching.